Welcome back,
Hi
ladies and
everyone.
gentlemen.
Thank you for.
So now we are proceeding to the very important panel discussion of the day on digital payments. And the important and our exclusive speakers who are going to cover this session are Mr. Kashinath Hariharan from ICICI, Mr. Bikram Singh, the head consumer business from Experian India, Aloke Singh from HSBC, Anthony He is from DBS Bank, Mr. Jithesh PV from Federal Bank, and Sharat Chandra, the moderator of the session. So, Sharat, all over to you to kindly take the proceedings of the panel. Thank you so much, and you can conclude the panel by 12 p.m. Thank you so much.
Thanks for the introduction and a warm welcome to all the fellow panelists for joining today's session. So, if you look at digital payments today, digital payments have seen an exponential rise in the last 1 month, 1.5 billion transactions in July itself. And uh, and this trend is going to continue because the consumer behavior has changed, and we will see more digital payments coming up in the months and days to come. So let me begin by asking Kashinath from ICICI Bank, how does he see B2B digital payments or cross-border digital payments shaping up? What are some of the challenges and drivers for change? So over to you, Kashinath.
Hi, good morning, everyone, and my pleasure to be part of this panel. Sharat, as I mentioned, I am running short of time, so I'll need to sign off after I kind of attempt to share my views on this. So, to begin with, the B2B payment space, it's difficult to paint it with one single broad brush because it is very nuanced and there are multiple segments within that. So let me, for the sake of simplicity, talk about two broad, areas in the B2B payment. So one is the large corporates making payments to other large corporates or SMEs. Both are businesses. And the other one is the SMEs, etc., making and collecting payments from or to the vendors or to their customers. This is again not in the world of retail where people usually talk about the UPI based payments and stuff like that. So if you look at by the volume of payments and if you look at the RBI stats and stuff like that, so this segment is extremely large, and most of the work which is happening today is happening in the smaller SME and that MSME kind of a B2B payment space. And here we are seeing the emergence of a lot of new players in the form of neobanks or call it with whatever name, open banking and stuff like that. This is an exciting space, and a lot of players are emerging in this space globally as well as increasingly in India. What is to specifically to be answering what is the future in this space? So I think it's an exciting space because banks have over time built the payment system internally, and still one needs to log into the bank payment systems either through a corporate internet banking or mobile banking platforms, and then from there initiate payments. So the new age neobanks essentially are coming in to kind of bridge the gap between what the customer experiences with respect to reaching to the bank and building a layer which is neither the core system or ERP of that company, nor it is the bank, and creating a middle layer, which one can call it an experience layer. This is essentially, as a rule of thumb, is what the neobanks are doing. So I see that in this space of the B2B world, the SME, MSME space, we will see a huge emergence of players in the neobanking space, and this model lends itself to a lot of allied businesses, as I may say, because once you understand the flows that are happening through this platform, then it leaves a tremendous trail of data, which can then be used for a lot of cross-sell, upsell, lending and stuff like that. Because see, in India, one has to understand the money is not in payments. I mean, let's be very clear about it. I mean, I'm sure all the other participants will really acknowledge that nobody pays for actually making a payment. I mean, much like in many other countries abroad where you actually earn a transaction fee in payments, in India, I can see Bikram smiling, and I'm sure he understands my point. It's extremely difficult to charge either an end customer or a B2B customer for a payment. So the whole model of payments is around aggregating data, is around aggregating convenience and creating layers which are neither bank nor this, and develop value proposition on top of that. So and also the new PA guidelines, which have been payment aggregator guidelines, which have been announced by RBI in the recent times, the implementation of which is now in the month of April. That will unleash a whole new set of parties who could come and essentially provide these kind of services. It is complex, interesting, and it's I really don't think the way UPI based payments went up, we may not see the same kind of growth to begin with, because historically we have seen that the adoption of a lot of this digital in the corporate side of the business, B2B side of the business, is relatively slower than in the retail world. So now coming on to the larger corporate world of B2B payments, there the key to success is more about integrating with those companies into their ERPs, which is what banks try to do. And there it is about giving seamless experience and having a right set of APIs and becoming invisible with the client so that you are part of the journey of the customer. Now in that space, really I am not seeing an immediate disruption. The reason being that's a very complex world, and each and every corporate have their respective ways of functioning, and their processes are very different. It is not meant for mass adoption. The same SAP implementation across corporates are so different that they become completely different animals. However, in that space, I do see banks and fintech working together in creating solutions that can effectively make the whole integration process seamless and effective. So that's how I see the whole space of the B2B payments emerging. Thank you.
Right. So, thanks, Kashinath, for your inputs. And since you talked about there's not enough money to be made in payments, so how can payment system operators, a bank, can leverage the data or the payments data to create new business models? And recently, along with the launch of UPI 2.0, OCEN was also introduced, Open Credit Enabling Network, right? So coming to Bikram, and I would like to know your thoughts on how the transaction data, the payment data can be leveraged by entities like the payment companies or banks to access new digital lending models. Your thoughts on that, please.
Yeah. Thank you, Sharat, and good morning, everyone. I think Kashinath raised a very pertinent point that payment companies don't make money, and it's not only payment companies. There's a big deterrent in the market for a lot of people to get into lending or become the intermediaries in lending, because today the lending infrastructure is so broken in a digital space that there are a lot of deterrents around right from disbursement to the collection. So I'm talking end to end here. I'm not even talking middleware right now. So that's something which is now getting addressed through OCEN, or OCEN, and that is something, as everyone is rightly saying, and I do believe in it, that OCEN is the UPI moment of lending. What UPI did to the digital payment space, there's a strong likelihood that OCEN will do the same to the lending side, and that is where the point being spoken about. While on one side we've always been speaking about democratizing lending, and we are talking about getting the masses into this formal lending side and all. A large portion of things which we miss out is that on the other side there are lenders, there are intermediaries and all, who also need to be profitable enough or make enough money to be excited enough to be a part of this ecosystem. And OCEN is basically, if I have to put it simply, is creating a common language for these lenders and marketplace to build a innovative and a financial credit product at scale. So I clearly see that this is a great opportunity. If we just look at some numbers here, it's being said that 38% of India's GDP is from MSME, but only 10% have access to formal credit. Now that clearly shows the gap available in the market. And in terms of value, it is estimated anything between 330 billion to $1 trillion. So what is that payments plus token and all that is trying to do now? The digital payments will remain the backbone of uh, Open, and the success of Open largely depends on digital payments, because of the fact that a large part or a majority part of the input is going to come through the digital payment platform, which could be account aggregator, which could be other data flowing into Open. And the piece here, what is the lender is looking at? Lender is first looking at disbursement. In between, he's looking at an e-mandate kind of a scenario, and lastly, he's looking at a collection kind of a scenario. So if we look at MSME, and we are right now Open, we are talking about MSME. I think as we go along, Open is something which will open up avenues for short-term personal loans, as an example. And that is something that we are talking about, last mile connectivity outside of MSME also. So when we talk about digital payments, so for example, can AETS be used as a module to make disbursements to someone sitting in a village or someone sitting in a small town? And UPI as an example, because Open is starting with UPI itself as an integral part of it. It will just open up the entire system very well. I would give an example here how digital payments and Open go hand in hand. And this is not a example that rather I would say this is an example which is available in the public space. But I love the example so much that instead of creating something or thinking of an example on my own, I rather would quote this example. So there is this example which is being talked about, which is about business vehicle trip financing. So for example, there is a trucker whose only asset in life is a truck, and he's associated with the logistics company. He can't take extra credit on the truck because of the fact that his truck is only hypothecated to a bank, which means that for him avenue of getting more lending is negligible, if I might put it that way. So just let's imagine a scenario where there's a shipper who wants to ship products. He goes to a logistics company. The logistics company in turn reaches out to this trucker and agrees on the terms. Uh, as the e-way bill is given from the shipper to the trucker, similarly the e-way bill through the Open platform, or the Open, not the platform, the Open infrastructure, if I might put it that way, reaches the lender also. So the lender accepts it. The trucker is shown the options of who can lend to him. So it's all happening digitally right now. The payment also flows digitally, or if I might say, the credit also flows digitally to the trucker here. Now, remember one thing, one of the biggest challenge which lenders face today is the end use. And if they know the end use of the credit so given out to the customer, it gives them a lot of comfort. And of course, empirical data shows that if you know the end use, you are able to collect better and your delinquencies are much lower. So just imagine, what does the trucker need here? Trucker needs fuel. Trucker needs a fast tag, or to pay his octroi and not octroi, but the GST and all that stuff. If all of this is all on the digital platform and in a digital format, so he's given maybe his fuel card is loaded. Similarly, his fast tag is loaded, which means that the end use is also controlled. And this is what we call about digital payments, right? We are talking about the end use getting controlled, the trucker getting finance for something that he needs for, and a portion of the money then subsequently getting back to him in an all digital scenario. So the disbursement happened in an end use state on products or on solutions which are controlled. When he gets when he does this, when he delivers the product and is able to substantiate that the delivery has been done, he gets the remaining payment through a digital mode, which is again a disbursement into his account. And in the turn, the lender has already got the money on through the Open railroads from the logistics company. So we are talking about a scenario where everything is digitized, is real time, and in all of this, it's not only tapping into a larger population. It's about reducing your cost, and this reduction of cost is eventually going to help reduce the cost of lending, reduce the overall operational cost, thus a win-win situation both for borrower, lender, and guess what, in between the LSP, which is the loan service provider, is getting to gain, because reason is that his business is bumping up. So this is how I look at the entire piece getting, if I might say, married on payment, on lending, on OKEN, and then obviously all the parties have a strong role to play, be it the bureau or whoever in this scenario, because bureaus can then step in and start modeling income estimation, propensity model, they can run fraud checks, all that stuff. So that's broadly what my thought is, and given the limited time, I would rather stop at this point of time.
Thanks, Bikram. Now, let me come to Aloke and seek his views on how banks and payment network providers can make money since NDR fees are zero for certain limited transactions. Right? So, how some new models banks or network providers can explore is loyalty rewards a way of driving those revenue models?
I was talking on mute. So I think we've got good perspective B2Bs. Well, obviously, that I can talk about. Where this definitely becomes interesting and is from an overall ecosystem perspective, where there is a whole partnership or the partnership model that we see between, and this is not only about fintechs and banks. I'm moving a step further in terms of the industry partnerships between banks, e-commerce players, all across today. This is one thing which is not going away, and it is only going to increase. Well, we've seen some 1.5 billion numbers out of UPI, is the overall digital payments from a retail consumer. So whether it means today I'm shopping on Amazon, sitting at home, or I'm ordering vegetables through Big Basket, I'm just giving some random examples and not any particular partners, or even if I'm paying electricity bills or I'm buying something which I'm sending for gifting to my parents or my family, I think altogether there is an opportunity to look at aspects of partnership, whether it is for the sake of acquiring customers or even if there are in terms of data sharing or database partnerships. I think that's where this whole piece will eventually move to. And if you look at aspects of today I would say India's largest telecom player today having got investments and that whole piece from a data consumption, I'm sure I think 30 or 50% of us may be using that same connection today to get into this call. This is all today moving towards a data-led ecosystem, and payments is no so very different. So if you look at it from that lens, I think, and today if banks can be open about these partnerships and not operating in their own silos or silos that have been created in the overall payments ecosystem for MDR or commission or acquiring fees or whatever that is there. If those barriers can be broken, then this becomes sort of a level playing field along with the growth that we've seen in e-commerce. Like I said, I'm giving a retail perspective here. That's the area that I've worked in, whether it's banking or my e-commerce experience before coming to HSBC, I would say 2.5 years back. I'll take a pause here. Given the shortage of time, maybe some of our other speakers can add in.
Thanks, Aloke. Now let me come to Anthony and seek his views on what he thinks is going to be the future of contactless payments. So recently, NPCI they made an announcement saying that they want to have NFC capabilities for the UPI infrastructure, where point of sale devices will have NFC capabilities built, and they are approaching payment aggregators and even speaking to manufacturing companies at cell phones. So do you see a tap and go as one of the prominent ways of contactless payments in the days to come or months to come?
Yeah. Thank you, Sharat, and good morning to all. Let me take a little different step out here. See, digital payments, once a convenience, have become a necessity in these times. I think it has really become a necessity. Why? Typically, it includes our day-to-day necessary payments have come into digital mode, be it grocery purchase, pharmacies, education, utility payments, everything has come in the digital mode. And people prefer contactless payments, much safer, cleaner way to pay, and also it saves time for them because it's quite fast. And it also, in the current scenario, the given current situation, it also controls the physical proximity. So the way I look at contactless is definitely it is a much needed peace of mind for consumers and merchants. So this is getting pushed big time. Some statistics, if you look at, citing safety and cleanliness, close to 80% of the people worldwide and probably 90% of the people in APAC believe that tap and go payments is the in thing, that's the way of life. Okay. And the way I look at it is this is a game changing moment for all of us. Probably COVID becomes a page in the history books as we go along, but this has really become a very, very important aspect of our life to move into a contactless payments. With this, if you look at it, how do you make it seamless? See, for a customer, he hasn't come to make payment. Customer has to come to buy something, maybe a grocery or a medicine or something. So can the payment be invisible? I think that is what we all are working in the digital payment mode. It's just a one click for him. In this, if you look at, there are three big trends which is emerging in these time in the contactless space. One is exploding growth of digital transaction, both in the consumer and the merchant side, because the biggest thing today, cash remains on the merchant side. So we see a large number. Second, what we are also looking at, the demand from the customer side has gone up big on the digital space. They wanted everything to be digitized. If you're digital, then probably they will look at getting into it. Third very important thing, because of this digital adoption, we see a great increase adoption on the AI enabled solutions as well. Okay, how it works. So what does bank play important role? So bank play a very important role in this innovation and the payment initiatives. See, they've been always doing it. COVID has just accelerated the need for a contactless and an online payments. Banks have enhanced offer digital. So how really bank went ahead in doing this stuff? Today, while the digital payments grew, I think banks really picked up big time, and they ensured the experience of the customer remains reliable and joyful for them. So they increase the capacity to accommodate higher traffic and everything. One more big thing what bank can leverage really is the capability they build on various APIs, which they expose to various fintech partners, work with them closely. Probably a entire ecosystem together working can really make this success. What we have also seen in the contactless payments is a structural shift in the client behavior. Okay, the businesses are pivoting on a digital way. And trust me, once client gets this experience of a digital contactless payments, there is no turning back. Their experience is so good, there is no turning back. So this definitely helps a lot. And one trend what we also see here is most of the merchants in the country have opened up the doors for digital payments, and that too purely on a contactless mode. It could be a QR code or it could be a tap and go. And I think they are proactively coming forward, which is pushing the customers to make the digital payments. One important thing what we also need to appreciate is when you go digital, there is opportunity to build a big scale. Okay, and what we need to do when we build a big scale is all about giving the omni-channel experience for the customers. On any digital mode, he gets the same experience, which is very, very crucial for us. Last one point I wanted to touch up before I hand over is while we do everything on the digital payments, I think the very important aspect which comes in the customer mind is the security. We need to offer a very secure experience, a very safe and secured mode of payments without really compromising the journey. It has to be completely hassle free. You can't expect customer to go to different channel to get more secure. It has to be as seamless as possible, while the bank or the app takes care of the security features of it. That's very, very important. To do this, if you really ask me, you need to completely rethink, redesign, and rebuild the banking ground so it becomes 100% digital. We may coming in it completely the end-to-end journey for the customer is digital. He is getting onboarded digital, he performs the transactions, the engagement with the bank is digital. Even tomorrow he feels like you want to exit of a particular bank, that's also digital. It's a true contactless digital experience. um, that's all, Sharad. I'll leave it to you.
Yeah, thanks, Anthony. And since we spoke about security, I think it's important to highlight that as digital payments grow in numbers, it's important to put the right importance to safety as well. So, coming to Jithesh, and I would like to know how banks are leveraging emerging technologies like AI and ML to tackle fraud and payment fraud.
Can you hear me? My microphone.
Yeah, we can hear you.
Can you unmute me? Can you hear me? I'm seeing the mic in red. Okay, fine. So, good morning, everyone. Good morning, Sharat, and all my co-panelists. So, today, as all of you are talking, all my co-panelists also were mentioning about the increasing number of digital payments in the country. Today, in the country, we do around 10 crore transactions in a day, which is valuing around 5 lakhs crore. So, the number of transactions has exponentially grown in the past, and as well as the frauds also are on the increase. So, banks also require, or the financial institutions also require a very dynamic mechanism to prevent or defense against the constantly evolving techniques of used by the modern fraudsters. So the conventional rule-based systems, etc., will become less effective because of the evolution and complexity of the modern fraud. And I think that is where the use of artificial intelligence and use of machine learning comes into picture. So AI can actually analyze millions of transactions and even define or identify patterns. And ML actually can use these data points, self-learn, create a pattern and self-learn, and actually create a better system while authorizing transactions. So when the data set goes larger, the results will become much more improved and the decisioning will be much more better. Today, see, if you look at a customer, the customer leaves millions of digital footprints across the network. For example, you are buying from your laptop, or you may be buying from a mobile. You are buying at a particular point of time. Your average ticket size will be maybe X amount, and you have certain selective buying patterns. So all this information is currently not used for while making a decision. Maybe if I am my location, what location I am making a payment from? Am I in a particular location for the last 1 hour or last 1 week? I am in a specific location, but all of a sudden a payment is coming from a different location. So all these data points should be used while authorizing payments. So that is where the BFSI industry or BFSI sector is actually looking towards use of more AI and ML based technologies for securing payments or while making authorizing payments, etc. So I think the use of AI is actually low in the industry, or overall the use of AI is low. But I hope with the availability of such a large set of data points, banks should definitely look at this particular channel, particular technology, AI and ML. And you are seeing triple dash, etc., which we'll talk later. And I stop here and over to Satish. So over to Sarit.
Thanks, Jithesh, for your inputs, and thanks, Bikram, Aloke, and Anthony for sharing your thoughts on the digital payments and how banks and network providers can come together and use data as one of the key elements to build new business models and offer seamless and secure solutions to users. Thank you, everyone, for joining today.
Thank you.